Crypto happy hour here. It's 8 o'clock in the evening on a Sunday. A fairly relaxing day of trading. Seems like Bitcoin has seen some of that positive movement to the upside that we were talking about this morning. But overall, kind of a lazy day, guys. We talked, what did I say this morning, Alex? Kind of range bound. And I mean, look at those candles. Two reversal candles back to back, one to the upside and one to the downside. Oh, man. Look at maybe a few boring days, guys. Looking at maybe a few boring days. All right. Well, I'm gonna assume they can hear us. Alex, let's check. Let me pull open. I guess let me pull open the YouTube. A few boring days. All right. Well, I'm gonna assume they can hear us. Alex, let's check. Let me pull open. I can hear me. Alex, say something, brother. Pull open the YouTube.
Something, brother.
All right. Well, I'm gonna assume they can hear us. Alex, let's check. Let me pull open. I can hear me. Alex, say something, brother. Pull open the YouTube.
Something, brother.
Okay, yeah, we're good, man. We're solid, dude. Thanks, guys, for dealing with the technical issues, and now we can get into the money-making strategies. So, Alex, what do you got for us tonight? I know that you had been kind of interested. Well, first, man, just how's it been? How's your week been? How's the trading been treating you?
The week has been up and down trading wise. I think everyone's aware that we made some entry calls and we got stopped out of several of our calls, and sure, the market as a whole had turned, but this is it's sort of one of the trials and tribulations of being a trader is taking the bad with the good.
Yeah, definitely, man. Yeah, I mean, that's the entire point. All right, Patrick Carr says they can hear us, and I can hear us too, man. All right, let's see. Patrick Carr, thanks for joining the stream. 6 on YouTube, 3 on Twitch. Thank you guys for watching today. We appreciate it. Hopefully we can get some more. And if not, hey, we do it for the love. We do it for the lols. We do it for the memes, man. All right, maybe. I don't know if is that accurate? Do we do it for the memes? I don't know. Maybe. Anyways, yeah, it's just kind of the market's turned against us, and that's something that I was posting up in the chat because as some of you may or may not know, one of my things is doing market research. So I spend a lot of time. We have a business partner, and he runs a traditional newsletter for stocks, equities, Forex, options, things of that nature. And it's a subscription-based newsletter and such. And he tells us that he regularly spends anywhere from $50,000 to $100,000 a year just on market research on what the competitors are doing, so that he can use that information to get a statistical edge in the market. Because if you're looking to get an edge in the market, it would behoove you to look at what the other analysts who believe they have a statistical edge, preferably ones who have a proven statistical edge in the market, to see what they are doing also. So market research is very important. So something that I do is, I like to look and see what all these other premium Telegram groups are doing. And yeah, man, they're posting left and right. They're getting wrecked on all the calls. And what's interesting, I think what distinguishes our group from them is our transparency about it and our ability to limit losses even when the market turns against you, so that your capital is preserved. Plus, we have a pretty well-defined base of what portion of your capital to invest on a trade. And you know what I think is actually even maybe slightly better than that is that for the first week of November, when you're seeing all these other trading groups get stopped out left and right, we still, for our closed calls, still ended in the green.
This is true. And I think that's a lot of that has to do with how we set our stops, because these are very volatile assets, and honestly, if we were trading on longer time frames, then like a 20% stop, 25% stop would not be unheard of for some of these also we're making calls on.
Yeah, you have to take that. You have to take the good with the bad. I mean, most people are buy and holders on cryptocurrency, and so they're willing to stomach 20, 30% down because they're looking for 60 to 70% over the course of like 4 to 5 months. Now, most people have not been willing to stomach the 80 to 90% down that the year of 2018 has largely been. But that's a time that's a lesson in market cycles, man. We've looked back and seen the traditional alt market coin run lasts anywhere from 8 to 12 weeks. So you got to get while the getting's good, And so now we're looking at yeah. You got to get while the getting's good, man. And so now we're just looking to see positioning into potential things. But at the same time, even in a down market, we're able to generate returns because there's all kinds of short-term opportunities. You just have to understand what kind of time frame are you willing to trade on, are you desiring to trade on, man. So Alex, what was some of this, if you want to get into the meat of what you wanted to talk about, man, before we go to some of these charts, I think you wanted to touch on the topics of divergence.
Yeah, I did want to touch on the topic of divergences, which I guess let's begin this topic by discussing what divergences are. I know many of our viewers are traders of some sort, in varying levels of expertise. So
competency.
For those who don't know, a divergence is a term that refers to when an indicator and price movements cease to match. So we are saying that price has diverged from the indicator. So for a bearish divergence, it's when the tops of two cycles don't match up, either higher or lower, depending on if it's a hidden divergence or regular divergence. And for a bullish divergence, if the bottoms of the indicator and price aren't quite matching up, whether it's higher or lower for a hidden or regular divergence. Go ahead, Justin.
No, I was just being sarcastic, and when you said levels of expertise, I said generally competency. But yeah, just we're having some people who are more skilled in trading than others, and that's gonna really affect their obviously their ability to trade or their successfulness or what they're aware of or what they don't know. I mean, we get different people in the stream all the time, and for me as a very experienced trader, for you as a very experienced trader, it's easy for me to look at a chart and be talking about like sentiment data, for example, or something, and be looking at the Fisher transform on longs and shorts ratios, and then extrapolating that to price data, and people are like, wait, what's the Fisher? Just some people are going to know more than others. So, I think that's another good thing about what we do too, is just focusing on teaching individuals what they need to know.
The important thing for people to realize is that divergences can appear on almost any oscillator style indicator. So you're going to see divergences on an RSI, on a Fisher, on a MACD, on just you name the oscillator indicator, and you will and it can host divergences. Now they will appear in different market conditions. So obviously, in RSI, the divergences are going to be more useful, I would say, in the extremes. So during uptrends and downtrends. And obviously, if you, for our viewers who read the paper that we're discussing, you'll find that divergences tend to work a little better, the bullish divergences over the bearish divergences. And one of the reasons is because of how the markets react to bearish and bullish cycles. We know that during an uptrend, price tends to, price these days tends to move explosively anyway, either direction, and then go sideways for a while. But for downward movements in particular, you'll see it's a quick downward movement, and then meanders for a little while, and then downward movement, meanders for a little while, and that makes things a little bit more difficult to catch with the bullish and bearish divergences of the various indicators.
Yeah, I mean, we trade divergence all the time. I mean, just looking at, It's one of the most powerful indications that we look for. And when you see divergence, especially on our preferred oscillator of choice, the Fisher transform, I mean, we tend to want to put money behind that movement because it's generally a great movement. So if we go over here and look, at Bitcoin Cash, which is probably one of our at least my better picks for the live stream. So we see right here on the Fisher transform, just for those of you who want a visual representation of what we're actually talking about, we have the Fisher transform here, our oscillator on the bottom, and we see price action form a higher high right here, and that's confirmed on the Fisher transform by posting a high. And then we experience price rallies again and posts a higher high. However, the Fisher transform posts a lower high. And that is a bearish divergence. That's telling us that this price movement up, at least as far as the distribution of data that Fisher is oscillating, or that is calculating for us, generally when a momentum oscillator like RSI, stochastic RSI, and which Fisher transform acts as, even though it calculates data in a different fashion, basically, it's telling us that this movement up is not moving up with the same strength that this one moved up for, and it's really more of a dead bounce. That this is not a healthy trend. This is not a healthy movement upwards, and that we're likely to see a reversal. And you can see that as soon as we posted that bearish divergence right there, you see the Fisher gives us a sell signal. It gives us a cross under right here on the top candle, and price moves significantly down. So when we're looking for divergence to trade into, we would be looking for a top movement like that to short from, or you're looking for bullish divergence, the opposite thing. You're looking for price to post a lower low in price action, and then the oscillator to actually post a higher low. And we might actually be seeing that right here. So you can see price posts a low right here on the Fisher transform, and price is posting a slightly higher low on the Fisher transform as well. So that could be a potentially bullish divergence scene.
Yes, absolutely. So the reason why I wanted to bring this paper to people's attention is for two reasons. First of all, because I think it would do everyone some good to, sometimes technical analysis can seem like a lot of magical hand waving. It's like, okay, we've got these squiggly lines, and they tell us something about the future. And bringing some empirical data and back testing into the discussion is, I think, like a very useful tool, both in bringing more confidence into the process, which obviously is a very important aspect of trading, but also because okay, fine, we know there's bearish divergences and bullish divergences, but like, how well do they work? Like, should we be focusing more on one than the other? And having a study of just how long till a divergence prints, or just how long until you get like the maximum amount of profits, and then you just you dump the divergence trade or whatever. Those are all important pieces of information that you need if you're going to be trading based off of divergences. So I thought it was a good starting point.
Just trying to draw the channel a best fit here on Bitcoin Cash. Yeah, man. So is there anything that article that you were reading that it talked about, like strategies of divergence or alternative ways of looking at divergence? I mean, you talked about like what divergence is, obviously, when a momentum oscillator is not confirming movements in price action, and you look for those differences to give you indications in the market to trade off of. Was there any particular like recommendations of strategy or alternate ways to look at divergence or anything of that nature that you think would be helpful to traders or viewers or anything like that? I feel like a lot of the data in this paper would not be helpful to many of the traders on our that are watching our broadcast, mostly because it talks about weekly and daily RSI and MACD divergence in the traditional markets. And so we're talking about like this divergence played out over 30 weeks, or this divergence played out over 80 days. And I thought it was good because obviously anything that works in traditional markets is going to work in the cryptocurrency markets. But because of how much faster these markets move, I don't feel like a lot of the data points in when you reach maximum profitability for divergences are that useful for us to take into the type of trading that we're doing here with these emerging class of assets. Yeah, that is an argument that is, and again, it's kind of the same thing that, I'm approached by lots of people that want me to chart fairly newer coins or coins that are trading on things like Crypto Bridge or, the Cryptopia or, some of these like IDEX, for example. And, what I tell them is that, listen, guys, like, it's very difficult for me to do that. I mean, you're now in the realm of the realms that we're operating in are different. The realm that you're operating in is absolute speculative investment based off some sort of fundamental research, or really for the majority of crypto traders out there, knowing the psychology of your typical crypto trader, it's really just hope and desire that you're going to get something that's going to be the next Bitcoin, that's going to grow explosively like Ethereum or any of those other altcoins, or the ICO boom that really kicked in the 2017 bull run. And what we do as traders is we take generally assets that have a larger pool of liquidity and far more market participants. And the more market participants you have, the more rational price tends to move. And we can use elements like volume. We can use elements like sentiment data to get as our black magic, which people like to refer to technical analysis as a fairly accurate indication of what price is statistically likely to do. And then we place bets off of that, which is what a trade is. And it's obviously it's working out pretty well for us and for our subscribers. And so that's just my argument for people. They call, I guess my argument is, or my issue is, people call technical analysis black magic, all these squiggly lines on a chart. But I don't understand what the difference between as opposed to what though? Like, as opposed to what? As opposed to what type? Everybody is interested in what price is going to do in the future. So what method do you have that is superior to technical analysis, which at least is based on mathematics, which at least is based on pattern recognition, which is at least based on statistical probabilities, which at least tends, honestly, if applied accurately and with a foundation of risk management and strategy, tends to be a profitable sequence of events. As opposed to what?
Well,
as opposed
exactly, to yeah, and that's exactly why I thought it was important for us to bring this empirical discussion into it, because I'm sure that people are curious a little bit about what goes on behind the black box when they're receiving signals of some sort. So we look at the various technical indicators. We look for divergences. We look for signs that the current movements in price are either unsustainable or they're not even showing how strong they are yet. It's like the indicator is showing, wow, there's a lot of strength in this movement, but price hasn't moved a lot. Well, that's something you hop into. Hope you get along for the ride. So this paper actually, what I thought was interesting was they really only discussed regular divergences, and there was no empirical exploration of hidden and exaggerated divergences, classes B and C, as
right.
They are referred to.
Sure. Actually, I want to see if I can pull up I have I know this stuff like the back of my hand, but people ask me so often about divergence that I have a nice cheat sheet for it, and maybe it would be helpful if we just went over that cheat sheet. So let me see if I can't pull that up, and then maybe we can just talk about that a little bit. And here it is. All right, cool. And now I'm just going to have to add that as a media source. Let's go to the chat real quick. Let's go to the chat real quick and just say, let me respond to Patrick Carr, because I disagree with Alex and Icarus Risen there. I do not like fruity vapes. They are very unpalatable to me. I have a sweet tooth, and having been on a ketogenic diet for several months now and having zero carbs, feel fantastic and healthy, by the way, but my sweet tooth is still there. So I like to vape on sweet, creamy stuff. So what we got in the vape right now is pecan caramel custard from Vape Strike. Actually, I just stopped by the local shop. Make sure you guys stop and support your local vape and tobacco store. You guys can order online, but you guys want it local. You want to be able to go pick it up close and fresh right from the distributor. Buy local, guys. All right, so that's my plug. All right, let's see some more stuff. Let's see here. Mastache in the Mastash in the chat. Scott Lanto, team member for Kraken Cryptocurrency. What's going on, guys? Thanks for the heads up. I talked about at length that I was doing a show tonight at 8 p.m. CST. Like, I mentioned it like 19 times. Scott, you got to stop having me on in the background, man. Let's see here. Philip says, well said, man. We are speculators and use technical analysis to measure risk in order to place the best speculative bet. Absolutely. Absolutely. And that's exactly the right way to look at it. And having a level head around what you're doing, I think, will make you very successful in this space.
And a lot of people are afraid of the word speculators, but they shouldn't be. You know, trading is not the same as long-term investing. You're looking to get in, you get out. You're only looking for movements in price.
Yeah, I think the way that I've put it many times is that, look, when I'm trading something, for a short-term trader with cryptocurrency, your fundamental analysis is all the same. Is the world going to adopt this as some kind of currency to use to transact a service or product? Okay, that's it. Again, I could be, I'm not alone in this, but I am in the minority on this, as opposed to altcoin fundamentalists and Bitcoin fundamentalists. So coming from that area, I believe that fundamentally the most profitable, I believe that what most coins are competing for, that's why they have created a currency, regardless of the service that they like to offer. They're competing to be a currency. And so whatever the world is going to adopt as a currency is going to be profitable. So that's your basic fundamental analysis. Like, it doesn't matter if you're trying to be open, it doesn't matter if you're trying to do ads. It doesn't matter if you're trying to do, distributed file sharing. It doesn't matter what your project is, because you can have a project without a token, without a currency. But the fact that you have generated a currency means that you want your token to be used in some form as a monetary transfer of value, a currency. So that's kind of how I tend to look at it. I know I'm in the minority here for people in this space, but if that's your fundamental analysis, all I'm really looking at now is, I know what I did wrong. Sorry. I'm trying to add this in so that we can look at this divergence cheat sheet. And what I need to do is capture a image, not a media source. So the fundamental foundations of most things are the same. Now, I'm taking a very broad brush, okay? But yeah, I mean, Alex hit the nail on the head. I'm looking at, is this coin going to go up? Most of the time, I don't really care about the fundamentals behind it. Sometimes I don't even know what the heck it is. But I've looked at the chart. I've done some fundamental analysis. I know it's not an absolute shit coin. And generally, I like to look at my social media sentiment, because something can be an absolute shit coin, but if it's being pumped hard enough on Twitter and there's good technicals behind it, you can make a pretty good statistical bet that this is probably a good investment, or speculation or a bet. And then you use your risk management strategy to minimize your losses, and you use a good targeting range or technical analysis to get your entry in to where your upside is high and your downside is low. And that's just trading 101, guys. Maybe I'm alone. Maybe I'm the only one that doesn't care. Like, is it distributed file sharing? I don't know. I don't give a crap. I don't care what these things are doing. All right, I just found it. Divergence cheat sheet. All right, now it's large on the screen. Okay, so it's kind of covering up Alex. But yeah, we can go over this. All right, cool. So this one I can delete. One of these days I'm gonna be. Oh my good lord! I just deleted it. Oh, I fail at life. Oh, I fail so hard at life. One of these days I'll be good at things like OBS. But until then, I'll just be profitable in trading, guys. One thing at a time, right? One thing at a time. All right, so let's bring this down here, and bam. Okay, so now you're over it, so let me slide this over, and that's perfect. Okay, so we've got the divergence on the chart. So Alex, I know that you're lagging behind me a little bit, but you should see this up on your browser if you're watching the YouTube channel, which I see that you're posting in the chat.
Yeah.
And only communists don't like fruity vapes. Well, I appreciate your constructive criticisms, but eat a dick. Moving on to reversal divergence. All right, so
constructive criticism.
All right, listen. Maybe we can split these up one by one, but we're looking at so for divergence, guys. Again, you're using a momentum oscillator, and you're going to be using price action. So you're looking for your momentum oscillator to not verify what price action is doing. And again, Alex likes the Fisher transform, as do I. That's our momentum oscillator of choice. However, these do work with your traditional momentum oscillators, like your stochastic and your RSI. Stochastic RSI is right out. We don't fuck with that. But stochastic by itself and RSI, we do use that. I use stochastic a lot, especially when I'm day trading. But generally, I find that the Fisher transform is just a much superior momentum oscillator. So I highly recommend you guys go check that out. I'm going to be making a new... By the way, guys, if you haven't watched it already, make sure you go out and check out my new Trading Crypto 101 video on TD Sequential, a comprehensive introduction to mastering market dynamics. I had a really good reception for the premiere, and it is live on our channel in the Trading Crypto 101 playlist, and I'll be putting out a new Trading Crypto 101 video every week. The next video, I'm going to start taking votes on these, but I've decided that the next video is most likely going to be on the volume profile, because that's the one I get asked the most questions about, and then I'll probably follow that up with the Fisher transform. And then we can go into... all right. So going over reversal divergences, we'll handle Class A divergence first, all right? And we'll just go from left to right. So when you're looking for reversal divergence, what reversal divergence is going to indicate to you is that you are most likely to experiencing a reversal in price. Now, you can have bearish divergence or bullish divergence. If it's bearish divergence, you are probably in an uptrend and you're expecting price to move down. If you're getting bullish divergence, you have price moving down and you're expecting price to move up. Okay, fairly simple. All right, so for bearish divergence, you are going to see what I just showed you guys on the Bitcoin Cash chart. I'll show you guys a live example of this. Again, you have price moving up. You have price making a higher high in price action, but you have your oscillator posting a lower high. And so if we go back to that bearish divergence, oh, you guys can't see. All right, sorry. So okay, so again, here on Bitcoin Cash, you have price posting a high and then a higher high, and your momentum oscillator posting a lower high. So your momentum oscillator is not verifying what you're seeing with price action, and that is reversal bearish divergence. You're expecting price to move lower, and as we can see with Bitcoin Cash in this example, that was a beautiful signal for price to move lower and a great place to enter into a short or to sell in the marketplace. All right, Alex, you want to go over bullish divergence?
It's a little difficult when I don't have the thing in front of us, but the major things to look for in bullish divergences are for the bottoms to not match up between the price and the indicator. So for a reversal, bullish divergence, for a standard divergence reversal, we're looking for price to make a lower low and in the indicator to make a higher low, indicating hidden strength in the price. The downward movement is showing signs of weakening. And for a continuation divergence, we're looking for price to make a higher low while the indicator makes a lower low, demonstrating that the indicator is kind of resetting itself. More strength is coming into the price movement over time.
Absolutely, man. Sorry, hey, I threw that to you in the DM in Discord so you could see that. And what I'm going to do, guys, is if you want this as a resource, and if you guys go to the Cracking Cryptocurrency Discord, the link is in the description down below. Otherwise, you can just point your browser to discord.crackingcryptocurrency.com. We'd love to see you in our community. We have a channel there in our Crypto Commons category called Trading 101, and I've just posted this up there, and I'm also going to pin it as a resource. Okay, so the divergence cheat sheet. All right, and my DMs are blowing the hell up right now. Can't respond to them all, can't get to them all, sorry about that. So you just covered bullish continuation divergence?
Yes, I did.
Okay. And so, yeah, what we're looking for, well, with class. So again, this gets there's a lot to this, guys, and mastering divergence is really going to improve your efficiency as a trader. So when we're looking at for class A divergence, which again is generally so when we're talking about divergence, we have three classes. Class A divergence is going to be your strongest divergence and going to give you the most powerful, significant movements. So when you see class A divergence, that's generally something that you want to, if the other technicals line up, put fairly significant capital behind relative to your position size and within the constraints of your risk management and trading system. Okay, so for class A, we've gone over bearish divergence, where price is making a higher high and your momentum oscillator is making a lower high. Bullish divergence, price making a lower low and your oscillator making a higher low. Bearish continuation divergence, which means that price is going to continue moving lower, meaning price is making a lower high and the indicator is making a higher high. This means that this means that price is trending down with more momentum than there is the potential to move upwards, meaning there is still a lot of sellers in the marketplace, and so you are betting against the trend, which is not good in this strategy since the trend is strong. You never want to bet against a weak trend, or excuse me, you never want to bet against a strong trend. That's why the whole entire crux of something like the TD sequential indicator, for example, with the TD countdown system, its entire goal is to identify a likely point when the trend is exhausting or weakening, and that is when you can safely bet against the trend with a counter trend trading strategy, which is the most profit capturing strategy. A trend trading strategy is by its nature less profit capturing, okay? Because it's less risky and so it's also less rewarding. A counter trend trading strategy is more risky and therefore more rewarding. But you can constrain that within your risk management strategy according to and congruent with your trading strategy. That's how we capture profits. So if we're expecting price to continue moving lower, bearish divergence, price making a lower high, the indicator making a higher high, and bullish continuation divergence is price making a higher low and the indicator making a lower low. So when you see these things, you can be safe in your position. If you're in a position and you see price move against you and post a higher low, but you don't know, is price going to fall out or is price going to continue to move up? Well, if your indicator is making a lower low, that is generally a good sign that you are going to see continuation of the bullish trend. Alternatively, if price is making a higher high on the oscillator, but a lower high on your price action, price is likely to continue moving down. You are confident in your short, or you are waiting for a long entry. Okay? Hopefully that explained that well.
All right, so let's call it on our discussion of divergences for now. I think that's everything we really have to say.
All right, cool. Yeah, again, there's Class B divergence and Class C divergence. If you guys want to look at this and master some of these things, I think they will greatly enhance your ability as a trader. And again, they are available in the Discord. And yeah. All right, so let's get rid of that. Alex, anything else? What else you got for us, man?
Well, that's all I really prepared. Do you want to take a look a little bit at the markets? Philip is discussing a little bit about what he's interested in talking about.
All right, let's look at the chat. Sorry. So Philip says, I am a new trader. I look at fib channels, fib retracement, Bulkowski pattern formation, MACD indicator, regular RSI indicator, and sometimes volume. Trying to learn a little bit about Elliott waves. So I know quite a bit about Elliott waves. I am not an Elliott wave guy because there are two types of traders. There's not just two types of traders. There's many different types of traders. But commonly for this format, for people that are charting cryptocurrency, you're gonna see two different kinds of people, I think. And that's people who know what they're talking about and people who don't know what they're talking about. So what I like to look at, the most important thing that I like to look at, and again, if you pay attention to my live streams or tune into my live streams, this is what you're going to see us doing. This is kind of our new format where we're looking at longs and shorts relative to price action, because I do believe that sentiment data is the most valid data in the marketplace. And you can apply a technical analysis of whatever stripe that you like to longs and shorts data, because the reason why that's important is because longs and shorts data is telling you what the market's doing right now. It's telling you the actual money that people have put into the markets, and that generally is going to give you a fairly clear indicator with pattern recognition and technical analysis, of course. But it's going to give you a look into the psychology of the marketplace. And once you understand how longs and shorts oscillate, and the psychology of people in profitable long positions and what they're likely to do, and people in profitable short positions and what they're likely to do. Conversely, people in unprofitable short positions and unprofitable long positions. That is basic market psychology, and that's far more powerful to trade off of, and in my experience, far more predictive than raw technical analysis on price data. So yeah, the rabbit hole is deep. There's lots to this. But Elliott waves, you can apply to what I'm talking about, longs and shorts data, or you can apply it to raw price action. Now, Elliott wave theory, there's a lot behind it that is valid. And you can see right here that I actually have done an Elliott wave analysis on Bitcoin, because I am not an Elliott wave trader by nature, but I do understand and believe that breakouts generally occur in 5-wave impulses and corrections generally occur in 3-wave impulses. The problem with Elliott waves, and also Elliott waves can be validated by Fibonacci retracement levels, which, as you can see, and if you pay attention, is also one of the biggest tools in my tool belt, is understanding of Fibonacci. Fibonacci channels and pitchforks I have gotten away from and doing in my daily analysis. But if you go back to my earliest, most popular Trading Crypto 101 video, it's a video on pitchforks, which is the same thing as a fib channel. You can set your Yeah, pitchforks are a fantastic indicator. The only reason that I've gotten away from them in our current market cycle is because pitchforks are what you use in a strong trending environment. All right, so pitchforks were very valid back in December 2017 when price was trending upward, and they were valid in the beginning of 2018 when price was trending strongly downward. However, price has broken out across the board just about on every single position, and so pitchforks are no longer valid. And pitchforks are more valid when you have a long directional trend to trade in. Pitchforks are not valid in a range-bound market. In a range-bound market, you have to rely on sentiment data and momentum, which is why momentum oscillators become far, far, far more important in something like current price action as opposed to a strong downtrend or an uptrend. And I think this is why so many YouTube channels have gone dark, unlike us, who continue to post videos throughout the entire bear market. Again, sorry, I don't mean to stroke my own ego or stoke the thing, but I think it's important to contrast the difference between these, because so many traders and so many of these people who are coming out and proclaiming themselves to be experienced traders and trying to sell products and services, I mean, they're new to trading. They've only been trading since 2017. They don't know what the hell they're doing. The only trading they know about is like some stochastic RSI basic technical analysis stuff that they found worked for them in one environment, and now they're sitting around wondering, since the direction of the market has changed, they lost money throughout 2018, and they're like, oh, we understand that we were in a strong bear market, and they justified their losses to themselves by saying, well, it was just a bear market and nobody saw it coming. Okay, well, that doesn't add up. You can't go to your landlord and tell him, well, it was a bear market and I didn't see him coming. That shit doesn't fly, dude. Try telling your wife that it was a bear market, I didn't see it coming. That you need to take agency for your own action and just admit that you didn't know how to handle your own money and you didn't understand market dynamics, market psychology, and you could have predicted and been prepared for it and cut your losses much earlier, right? The smartest cryptocurrency traders sold their Bitcoin at $17,000 or $14,000 or $12,000. And the unexperienced ones held throughout the whole thing, unless you're taking the really long-term approach, which I still don't think is the most profitable approach. I mean, you would have garnered far more profit if you would have just traded the most simple trading strategy, as I've talked about at length. Backtest any moving average strategy, and you would have made more than a buy and hold return. So let's see here. We got Johnny Boy Crypto in the chat. What's going on, man? We're gonna go as long as people want us to go, man. You know me, dude. It's 8 o'clock going on 9, man. All right, so let's see here. So yeah, and now, what I think is more insidious, so just building off that last point that I was saying, is that now we see the market shift from a strong downtrend to a range-bound market, and now people are getting wrecked all over again because we've had 3 strong directional shifts in the market, trending and now ranging, and people just don't know how to change their strategy to fit that, and it's so easy to do if you've been trading for a long time like I have. And again, I'm not right all the time. We're not perfect. We make mistakes, but our wins outnumber our losses, and our losses are small, and that's how we're able to do this day in, day out and make money from it. So yeah, I do have an Elliott wave pattern here, and maybe I can make a series on Elliott waves. I'll be honest with you, it's not super high up on my priority list, but just pay attention to the live streams. It's something that I will go over from time to time. There's validation with Fibonacci with Elliott waves, and there is something to it. I just find that I just find that in my personal experience, although Elliott waves may or may not be effective, which they are, I do find them to be effective. There's just better indications to use because because Elliott waves are the most subjective of technical analysis. They really are the most subjective. And anybody who tells you that they're not, say that again, my friend. I'm sorry. You broke up on my headset.
They only seem to work in hindsight for me.
Right, yeah. It's kind of one of those things that, I mean, if you're really, really, really good at Elliott waves, you can probably be a good trader off of it because you're getting a general idea for where the market's going. But I just find it's just far more effective to use volume and sentiment data so that you can actually be precise in your movements and make better statistically edged bets. So. All right, good looking out. Let's see here. Philip says, I have fib channel set with 0.25 lines and 0.5 heart line. Very simple, no pitchfork here. Pretty simple, like a better parallel channel for a long uptrend. Yeah, that, and I remember that, that is a very good strategy for a strongly trending market. So if we do go into a strong uptrend, your fib channel is going to serve you well. I would highly recommend that you add the 0.618 and the 0.786 Fibonacci levels to your parallel channels or to your fib channels. I find that they're generally the most effective. I find that heart channel, you're talking about Hagopian's rule, which is Hagopian's rule for a fib channel or for a pitchfork or for an ascending channel of any kind, is that, for example, if price breaks through the 50% heart line, I think you've been watching Mitch Ray. If price breaks through that heart line, then price is most likely to accelerate rapidly to the other side or to a quartet. However, if price reverses before touching the heart line or the 50% retracement line, then it is likely to move away with greater volatility and greater momentum than it did moving toward the 50% retracement line. And that's Hagopian's rule of pitchforks and trend lines, and I find that to be extremely accurate. Go take a look. Scott, see if you can drop the link in the comments. But yeah, if you go back to my Trading Crypto 101 and watch my video on pitchforks, I think you're going to find that very helpful to you because all those same strategies and rules for trading pitchforks apply to trading fib channels and parallel channels. But yeah, I think that's a great foundation to start with, and I think that's going to help you be successful in the marketplace. So, and again, we talk about this a lot, Alex. There's no right way to trade. There are more successful strategies than others. I think you have to take an objective look at how successful your strategy is, and that's going to help you to just grow and continue moving forward. But if you're comfortable in what you're doing and you're able to generate returns, sticking to your strategy, and you're comfortable in your execution, just keep doing what you're doing and just look for ways to improve. Don't do the worst thing. Don't fall into the black hole of trading where you're following your strategy and it's profitable, and then you start having a series of losers, and then you're like, man, I must be doing something wrong. I'm just going to change this part of my strategy, and I'm going to tweak this, and I'm going to tweak this, and then maybe you make some more money for a while, and then you go on that losing streak again, and now you're changing this and changing this and changing this, and then you're profitable for a while, and then you start losing money again, and now you're changing this, and by 3 changes later, you have a strategy where you feel no confidence because you've changed things like 4 times. You don't understand the basics or dynamics of what you're doing. And all you had to do is just realize that you're going to have losing streaks. That's fine. You stick to your strategy, and eventually the market turns in your favor and you start being profitable again. If you're comfortable doing what you're doing, stick to what you're doing. And then look for ways to improve what you're doing. Don't think that you're losing, so you have to throw out the baby with the bathwater. That's the biggest problem with trading, man. So many people do that. Black hole drink. Oh shoot. Yeah, actually, you know what? I really like Mitch as well, man. He's very entertaining to watch. I can tell from that Heartline thing, man. Yeah, awesome, dude. Awesome. Yeah, TA does bring us together, man, because it's something we can all agree on and look at objectively on the charts. And hey, man, it's helping us all profit. That's why we're all here. So, yeah, man, I wax loquaciously. Alex, did you want to pull up some charts, man? Because I saw you posted an XBT chart. You want me to give you the floor and maybe do some TA for us?
Oh, well, I just, someone was asking about the pitchfork stuff, so I just posted that pitchfork chart I did. Gosh, was it back in, I did it back in May. I did a Bitcoin pitchfork chart on the BitMEX perpetual swap markets, and I'm pretty happy with that one. It's still good. It's still very interesting to look at. Have you seen it?
Yeah, actually, I'll pull it up right now. I'm gonna have to go to YouTube and go to the chat.
I believe it. He's posted that.
There we go. Oh yeah, man! Look at the power of the pitchfork right here, guys. All right, I like it.
Just press play.
Press play. All right, guys. You ready? This is live, guys. Looked like it's good. Okay, good. It's updating. My Twitch is just a little behind. Oh my goodness. Look at that beauty right there, man. I mean, he killed it, dude. Yeah, look at that power of the pitchfork, man. And then we finally break out of the pitchfork right there. That is fantastic, dude. Good trading. Look at all the times we reverse off these quartets. That 786, or excuse me, that 618, the 786. We blow through it. We meet the top of the resistance. We fall back to that 618, break through the 786, test the 786, and then we are actually able to break out of the channel. Fantastic work, man.
And what I really love about it is that you can see the pitchfork works great over to the left, too. So it's like we were in a pitchfork channel, and then we fell out of it right into another channel.
Yeah, let's look at that on the screen. Yeah, you guys see that? That is quite beautiful, man. And so as you can see, he did the basics of how to chart a proper pitchfork. If you're charting an uptrend, you start from the lowest, from a low, you go to your next high and then your next market low, and that gives you a very accurate pitchfork. And alternatively, when you're looking at your, did you do it? Is this a shift pitchfork or is that just a trend line you drew for the sloping one?
What? Pardon?
So for the first pitchfork, I can clearly see that you used a traditional pitchfork. Is the second one that you drew a shift pitchfork?
Oh, no. They're both normal pitchforks.
Okay.
I just for the second one, I've got that. I've got the pink line is just a trend line.
Okay. So yeah, and again, he went from a low.
The trend line we were all looking at back in May. That was the breakout, and then we retested it.
Okay, excellent. And yeah, as you can see here from the second one, he went from the low to the next high to the next low, and that gave you a fantastically accurate pitchfork. Again, guys, I don't know if we can do that accurate bar replay, but again, when he drew this pitchfork, we were right here, and then pressing play lets us move forward and just see how accurately that held. That 50% retracement level holds beautifully. Price reverses, tests the upper band. We continue moving forward. We're held at the 286. We blow through the 618. And you can just see the progression here of these higher highs, guys. Look, the 50% retracement holds, and then we test the 236, and then we test the 618. And then we test the 786, and then we break out. We actually have a double tap off the 786, and then we break out. That's a beautiful pattern, man. It's a beautiful pattern, very powerful.
Yeah. This is like the only trading view idea I posted because I saw it and I just felt so strongly about it. I was like, this is a channel. I know it. I know it's a channel.
Gotta give you a thumbs up and a comment, man. Killing it. Live on the air. All right. There you go. Cracking cryptocurrency. Branded and loved. All right. Awesome. Fantastic work, man. Oh, let's see over here. All right. Hey, thanks everybody for tuning in, watching us. We got 12 live on YouTube. We got about 4 people on Twitch. We really appreciate the support, man. If you guys are new to the channel, make sure to smash that like button, guys. Get this in front of the eyeballs that need to see it so people can make better decisions in their trading. Make sure you hit that subscribe button, a little ding on the notification bell so you can be notified when we go live, which is once a day, guys, 11 a.m. Central Standard Time every morning for our Breaking Bitcoin Market Update, Sunday evenings for our Crypto Currently. And we got a lot of exciting stuff coming up, guys. We've got some guests that want to come on the show, some coin projects that I am tentative in bringing on because I want to deal with raw TA. Not raw TA, but raw markets. That's kind of my thing. We're traders. But there's some really cool, exciting projects out here, man. And I only want to bring on projects that I think are solid, that I think are good people, good projects, good communities. And we've got some of those lined up. Guys, make sure you check out Your Crypto Daily News, proud partners of the show, for your nightly source of crypto news. Fantastic show. And if you want to hear some of my more off-color rantings away from the market, make sure to check out the Your Crypto Daily live stream. Shout out to Red Planet 32 and Johnny Boy Crypto holding it down over there. Let's see here. All right, man. Alex, do you want to do some TA, or you want me to go crazy and do my thing, or the floor is yours, man, if you want to.
I feel pretty satisfied with what we discussed.
All right, I'm gonna move Alex down here just a little bit and make you a little smaller. No, you're not going away. I'm just making you a little smaller.
Okay.
Just putting you in the bottom right of the screen so people can still see it. Don't worry. All right, guys, so we'll just make this short, quick, fast, and in a hurry. We're just going to talk about some of what we had talked about earlier. So we're just going to look at Bitcoin and maybe some of the big coins, guys. Again, I do market updates every morning. I'm not. I am not too big of a man to say that I told you so. But generally, I like to, it's nice to be able to, log in every morning and smile and say, I told you so, guys. So again, live on the air, we called this top. Live on the air, we called this reversal. And again, this morning I said, we're probably going to experience some more bullish movement. If you just go look at my published ideas on TradingView that I publish every day, let's see, where's my text notes? Here we go. Here we go. What did I say? Let's bring this down. Sorry. Okay, let's bring this down. So again, I wrote this morning. I said, Bitcoin's right back to where we started. No rising open interest leads to the notion that price is range bound between our pivot high and pivot low. We can safely go long and short in this atmosphere within tight parameters using TD sequential and other momentum indicators are your best bet right now on either time frame. Recommend trading these shorter time frames. So we can see here the Fisher transform did give us the buy signal right here at an amazing opportunity to enter this market. You would have been able to capture this entire movement. And what's interesting about this is that on the higher time frames, if you guys don't understand what I mean by being range bound, I mean, here, let me hide the drawing tools. All right, and let's just look at price action, guys. Does this not look like a range bound market to you? We've got strong resistance. We're not able to break above 6,800, really, guys. And we're not able to go lower than 6,000, really. 6,033 is our recent pivot low. Let's see if I can throw pivot highs and pivot lows on. There we go. Let's actually look at the numbers, guys. We're not able to break above 68.23 is our current daily is our current 12-hour high, and 60.33 is our current 12-hour low. So we're stuck within that range, really this tightening range, and you can see that price tightened up. We had more volatility here, and then we had this great week-long period of Bitcoin being the stablest currency on the goddamn planet. And then we had a little bit of a dip, a price rise back up, and we're just right back to where we started in that consolidation period. So in this kind of market, guys, in this kind of range-bound market, you're not looking for a strong directional trend up until we break out and get confirmation of a breakout. And you're not looking for a strong directional trend down until we break down and get a strong and get volume to confirm that, guys. So again, just looking at volume is fairly flat. Volume is actually kind of falling off. Sentiment is extremely low. Bitcoin shorts are at an all-time low, which lets me know that the trades to the upside are generally safer and more profitable. But this is a range bound market, guys. So when you see a top, you want to short it. You're not expecting for really price to break out and run because you don't see price breaking out anywhere. Every time we experience a top back since September, guys, listen, every time we experience a bottom, price does not run lower. Price reverses. Every time we experience a top, price reverses. We're not seeing any breakout movements here, guys. So this is a range-bound market, and you want to adopt the correct strategy to be profitable. I mean, you want to be going long on all these bottoms and going short on all these tops. And if your margins are lower, that's fine. Like, say you're only going long here, that's fine, and you're exiting here, that's fine. Say you're only going short here and you're exiting here, that's fine. You're booking profits on the books, man. You're booking profits on your tracking sheet. So just understand that this is the market that we're in. We're range bound. Get a momentum oscillator, become comfortable with it, throw all your other bullshit away, and just trade within your range. So let's look at where we're at right now. Yes, I know, Alex, my chart is super, super busy, man. All right, so as we can see right here, Bitcoin traded out of three channel patterns, right? The orange line represents the yellow line on my chart represents the compound fulcrum that Bitcoin was trading in pretty much all, through the entire year since the initial fall back down to 6,000. And then we were trading in that compound fulcrum. We broke out of that and we're trading within this really descending wedge. Broke out of that, and then we move into this symmetrical triangle, really this wedge pattern formation right here that we're able to have a false breakout of. Price fell right back into the channel. As you can see right here, the green wedge that I've drawn, and price respected that upward trend line, which also is the 618 Fibonacci retracement. So that's good. And now price is moving up. Price continues to move up quite just as predicted. So what's up, man?
You're breaking up a lot.
I'm breaking up a lot. My bad. I need to move closer to the microphone because I've got that noise gate filter on. So let me actually take that bad boy off. Yes, I've got that noise gate filter on. So let's just go ahead and remove that because I don't have a lot of noise. So I'll just leave the noise suppression on. So hopefully that's better, guys. I apologize if that's the case. Hopefully you guys can hear me okay now, and I apologize if you couldn't hear me a little bit earlier, because I don't want to talk like this because I don't think this is good. But yeah, again, guys, I'm good at making money, not so good at running OBS. All right, so let's see here. So we've got resistance right here at our 382, about 63.95 to 6400. That's also our point of control on our VPVR. So I'm expecting resistance there. If we're able to break that, our next resistance is 6450, guys. So I'm really not interested in I'm really not, I think a long position right here is safe. But again, we're having a lot of resistance, guys. Now we are getting a buy signal on the Fisher transform. Falling volume, though, tells me that it's probably not the safest bet. Now, the last time that I looked at sentiment data, here we go. So let's look at sentiment data here. So this is a chart of BTC USD longs, and we've got shorts in the red, and the yellow line indicates price action, guys. So we see longs falling off. Longs got rejected from the channel bottom, and every time we're in this channel, we kind of move up and down, guys. So longs are dropping off, and shorts are dropping off, guys, and we're not getting a buy signal in our longs. In fact, the last signal that we got was our sell signal, and the Fisher transform on longs has now moved back under the zero line, which is traditionally a bullish sign. You can see here that every time we're staying lower than the zero line for the majority of the Fisher transform price action, price is falling, as you can see, where the yellow line is price action. And again, when the Fisher transform breaks above the zero line, price begins to move up. So, I'm not getting a strong directional bias either way. All right, Lee Cheese, thanks for the follow, man. I very much appreciate it. Pump incoming. Lee Cheese has joined the mothership. Thank you, man. I appreciate it. All right. Oh, I'm just breaking up for you? Oh, that could be because you're hearing a different microphone than the viewers. So yeah, guys, listen. Normally, I would say with longs hitting this resistance and moving down, the price action is likely to move down. But no shorts have picked up on this price action, guys. Shorts are still at a 3-month low. And so this is just telling me again that price is going to be range bound right now, guys. So price is probably going to move up a little bit from here and then move back down and then move back up. I'm not seeing the trigger for the bull run right now. More people are bullish on Bitcoin than bearish. Clearly, we're seeing that. All right. Oh, Leeches. Okay, that's the name. Leeches, right on. Mike is fine, by the way. Thanks so much. I appreciate it. Let's see here. On the path to affiliate for Twitch, guys. Guys, we'll be Twitch affiliate here pretty soon, man. Tell your friends, tell your family. Fuck, tell people you don't even like, man. We just need the followers. All right, let's see here. Right. We'll be nice to the friends and family. So yeah, guys, price still range bound. Okay. So that's the analysis of Bitcoin. Price likely to move up. We'll see what happens when we test this resistance. Again, we're already kind of seeing it. Leeches says, sorry to burst your bubble, but affiliate program is pretty shit. No, listen, I know that listen, so I'm not really doing this to bring in money. I don't need to be a Twitch streamer to bring in money. Okay, so let me pause for the cause and pay some bills, guys. So, are you new to trading? Are you losing money in this market? Would you like some guidance and direction, as well as trade setups and ideas on how to be a more profitable trader? Would you like an experienced trader to mentor you with 10 years? Would you like a fully prepared trading strategy and system and one-on-one mentorship in a community that makes money day in and day out? Then point your browser over to crackingcryptocurrency.com, guys. While you're here, pick up some merch, man. Scott's gonna kill me if I don't plug the merch. Gotta plug the merch, man. Grab a shirt for the lady that you love. Grab a backpack. Hell, grab a ball cap. Yeah. If you're interested in taking your trading to the next level, check out trading services. But the most important thing that you want to do here, guys, is on that homepage, make sure you click that beautiful blue button that says join the community. That's going to take you to our Discord. That's going to take you to our Discord, and I think that's the most important resource that you're going to have available to you. I will not forget to mention it, but yes, we are having a Veterans Day discount. If you are a veteran, we are giving away one random veteran a free 1 month subscription. I think it's a 1 month subscription. Scott's going to correct me if I'm wrong. He's the one that handles the money. We're going to have a free 1 month subscription to our premium signals and mentorship program. X42 has kindly donated 1,000 X42, and we're giving 10 X42 to the next 100 subscribers. That's actually $10 worth of X42, and actually it continues to grow in value every single day. So that is a 20% discount on the 1 month fee of $49.99. If you have any questions, you can contact us at contact@krakencryptocurrency.com. Okay, did I plug everything I'm supposed to plug, Scott, so that we can continue to keep the lights on? All right. Hopefully I did everything. He's probably gonna yell at me later and be like, "You didn't." He's gonna yell at me later and be like, "You didn't talk about the merch enough." I don't know. Like, I can't do anything right, I guess. But just make money off trading, I guess. So, anyways, guys, yeah, free Primo sub for a veteran. I got a lot of respect for the vets, man. Looking at Ethereum USD, looking like, again, range bound, man. We get, how often do you get a reversal candle and then a reversal candle within a range of, like, seriously, on candle closes of what, like, seriously, a frickin' dollar? Let's see here. Leeches says, to be honest, when it comes to making some money, I don't really feel like that going for Bitcoin is going to be the best option. Once again, just my own opinion. I am looking out for altcoins more, like Ethereum, etc. Yeah, absolutely, man. That's kind of what we do. We trade altcoins and we hold Bitcoin, and I use the profits from altcoins to increase my Bitcoin position. That's my entire philosophy for trading, because I think in the long term, Bitcoin's the safest coin to be in. I think it has the most long-term future potential. And again, we're not really buy and holders on the majority of what we do. We're day traders, we're swing traders. So we're just looking to take profitable positions. We're speculators, yep. And we're just looking for what's going to increase our stack of either USD, which is fake money, or Bitcoin, which I think is real money. So yeah, man. But again, we have traders in our group that have lots of different philosophies. Some just want to stack USD. That's totally fine. I'm not against that. Me, I prefer to stack my Bitcoin because I am preparing for the future conflagration, which might happen in 2020, 2025, 2019. I don't know. I've done charting it. Right, yeah. I've done calculations live on stream of, like, the Dow Jones Industrial, and I've compared, 1929 and the collapse, and I've also looked at things like, the SPX. Really, but here, I don't think that. Listen, like, and again, I was talking. Check out Your Crypto Daily News, because we like to talk conspiracies on there a lot, and we've been focusing kind of like on that November 11th thing. I think we got a lot of QAnon kind of guys, which I think is, like, kind of a funny thing, But yeah, I don't think anything major is going to happen on November 11th. It's just another day. But it's cool.
It is November 11th.
Yeah. Oh, it's November 11th right now?
Yes.
Well, not where I'm at. I've still got 3 hours left to stack water.
No, dude, it's been November 11th all day.
It's November 11th today?
Yes. Yes, today's November 11th.
I thought it was the 10th. Jesus, man.
You missed today.
Oh my God, it's November 11th. You guys know what that means. It's the end of the fucking world, guys. We got to end the stream. I got to go get water and everything. I got to wear my children. I got to go pick up my children. Oh my God, what's going on? It's all going to burn. Oh, wait. Actually, the SPX is up and the DJI is up and my 401k is in more profit. Oh, shit, man. Let's see here. By the way, do you think we would enter into an economic crisis of some sort in the near future, 2020-ish, due to housing thing that we are seeing right now? 11/11, my guess. Yeah, I definitely listen, and I've talked about this a lot. Like, Ray Dalio has a pretty good video out right now on the way the economy works, and he's talking about it beautifully deleveraging. I agree with, like, the first 25 minutes of his presentation and the first half of his book. So yeah, go check that out. Ray Dalio on YouTube. how the economic machine works. It's a pretty good video. And I agree with the first 25 minutes of that 30-minute YouTube video. The last 5 minutes, which is basically just fluffing for the Federal Reserve central banking structure, is absolute horseshit, dude. Like, the economy is way over leveraged. We're going to go through a deleveraging. The Fed is absolutely not prepared to deal with it. We have a massive bubble of equities. We have a massive bubble of value stocks, and there's nothing that they can do. They're going to have no choice but to raise interest rates. And we've got so many crises in America on so many fronts. Whether you're talking about wages, whether you're talking about immigration, whether you're talking about politics. I mean, it's just. Listen, I'm not a fear monger, dude, and that's not what I do, because I think that we're going to be able to trade safely through all this, and I don't think the world's coming to an end. But you can bet your goddamn bottom dollar, dude, that something's coming that nobody is prepared for. And that's why, I mean, listen, I'm prepared for it, guys. I live in a small state, in a small town. I have physical gold on hand. I'm not a gold bug. I have my Bitcoin, the majority of my Bitcoin in cold storage, so I'm ready to sit this baby out. I've got a generator. We've got guns. We've got water. We've
stuck when you can't access your Bitcoin because you don't have internet.
It's cool, dude. I will be patient. And again, another thing about that whole internet going down, can't access Bitcoin, Blockstream, dude. The blockchain is on the satellites. You know what I'm saying?
Yeah, they did just debut that this year, didn't they?
Yeah, man. So, yeah, you don't even need it, dude. Can you link the videos? Got it. Gonna look it up. Yeah, right on, man. Yeah, I don't know if... Scott's on Twitch, so maybe if he wants to look that up. But yeah, Ray Dalio, it's called the Economic Machine. It's a really good video. So really good to watch. But again, I disagree with the last part where he says, we can have a beautiful deleveraging of the American economy. No, we can't. No, we can't. It's just like, I don't want to be too extreme with my analogies here, but if you've been a heroin addict for 20 years, you're going to have to go through some serious health risks to get yourself off the heroin. And it's just going to be horrible no matter how you look at it. And America is a heroin addict of cheap money and credit, really is what it is. We think credit is money. Most people have no idea. Most people conflate credit and money. Money in the bank, they think that's money. It's not. It's all credit, dude. The majority of money that we've got flowing around is just credit. And credit's going to contract, man. And, we've had many economic cycles. The next one is going to be... I mean, the one that we're coming, I'm looking at maybe 2020, but it could maybe 2025, man. Like, people are absolutely amazing at ignoring the problem and just doubling down on insanity. And so, yeah, this could ride for a while, guys. In the short term, do I think the stock market's going to collapse? No, I think we're going to continue to post new all-time highs for maybe a year or two. When you're posting new all-time highs, you expect to post new all-time highs. The 10% collapse in the DJI and the SPX. Did I sell my 401k? No, I keep 10% of my 401k and my IRAs in cash. And you know what I did? As far as traditional stocks were concerned, I bought the dip. All right, and now my 401k is up quite a bit, guys. Just like the situation in Bitcoin's a little bit different, man. Let's take a break, and I know that you guys know why I'm like waxing loquaciously, because I got my gas station bourbon that I guess I've become fucking famous for. Jesus Christ.
Your grill lighter fluid.
Yeah, got my brown lighter fluid. All right, let's take a brief pause for the cause and do some chat engagement. Let's see what the chat's kind of blowing up, guys. So let's take a look at it. Let's see here. Philip says the market's come in patterns, 10-year uptrend. It's not a conspiracy theory to say we're going to see a correction, if not a major crash. Philip says he likes precious metal. I have silver. Yep. Hey, silver's good, man. I got a shit ton of silver, man. Like, and it's gone up a little bit. I bought a lot of my silver like back in 2012 when I kind of like really got pushed on it. But, I like buying silver. You know what? I don't know if it's like, it's not a fetish. I just think it's cool. I like to have like actual physical silver. I don't speculate on silver's futures or gold futures anymore. I just don't think the market's very profitable. But what I like doing is like once a month, I like to scan, like I go through JM Bullion is where I usually get my silver. And like once a month or every other month, they'll have like new mentors, like new cool little prints like Vikings or, I got a really cool silver bar, and what it is it's Jesus whipping the money lenders, at the temple. Fantastic press, man. Yeah, and so I bought like 5 of those, like 1 to 4 ounce, like little silver bars, dude. And yeah.
Yeah, you can never have enough artistic depictions of Jesus whipping people.
No, you cannot. That's right up there with like absolutely fantastic, man. Let's see here. Yeah, absolutely, man. Philip, I've been on that sustainable growth and handling your own for a long time, man. It's the only way to live. Yeah, I do have significantly more silver than I have gold. There's only enough gold, to fill 3 Olympic-sized swimming pools in the entire world. Is that right? Yeah. 3 Olympic-sized swimming pools, I think, in the entire world. So it's hard to get a whole bunch of gold. Let's hop over to Twitch. Let's see. Leeches says, yeah, I feel you. That's what I was thinking about. The crisis might not be in 2019 and maybe not 2020, but around 2020 plus. Yeah. How's gold doing right now? Still rising due to S&M 500 going down. I have not looked at gold in a while. Alex, you like to look at gold once in a while, don't you? What's the last time you looked at gold?
I have not looked at it in a few weeks, but all my lines should still be up. I can pull up a chart for you.
Yeah, please do.
Here we go. 1 second.
Yeah, you look at gold more than I do. That would be interesting. Yes, Alex has actually charted gold out pretty nicely. See, gold and silver. Yeah, I used to trade gold and silver futures. I used to speculate them, especially when I was an options trader and a forex trader. But since I've moved mostly into cryptocurrency, gold and silver have now become more of a buy and hold thing. Philip says Jesus whipping the money changers out of the temples. Yeah, that's what it is. Yeah, Jesus whipping the money changers out of the temples is fantastic.
Like a solid short here.
Oh, hold on. Let me maximize your chart. Hold on. Let me give you.
While I have this open, Litecoin just popped up. This looks like a really solid short.
Let me fit you to screen and see if I can't. Okay, yeah. There we go. Yeah, hopefully, people can see it now. Hopefully, fairly good. And I'll just be kind of shoot. No. Okay, there we go. I found you. So now I can move you down right below me. Okay, cool. Yeah, go ahead. Take it away, Alex. What do you see there on Litecoin, man?
I just think Litecoin looks like a really solid short right here. Don't you think so?
Let's see.
That's clearly a retest of support turned resistance. And it looks like we're getting a rejection here. I don't see very much strength in this price movement.
Yeah, I feel you too. Look at that massive spike in volume, kind of in an established uptrend. It gives me, the only thing that gives me pause is that it didn't happen in an uptrend. It kind of happened.
How about this? What about this divergence that we're looking at right here?
Yep, you got it, man. Class B divergence, V-top divergence on the oscillator, and a higher high on price action, guys. So that is your medium strength. That's your Class B divergence. So you're expecting.
Yeah, look at that. This looks like a solid. What is that? 1 to 2%.
Yeah. Potential
either
retest
here or here.
I'd also be looking for a retest of that support though, if you're just scalping.
Yeah, right here. Just a retest of the support. 5x, 10x, we're looking at around 5 to 10%. Well, it means 7 to 15%, but
Yeah. Good.
Anyway,
hey, you guys don't get this anywhere else. Live calls on the air, man.
Anyway, let's look what we really want to look at. Let's head back on over here.
Leeches asks, by the way, any altcoins you are looking out for? So there are some altcoins that we have position sized into. What I highly recommend, and again, I know we run a service, but I'm just being real, guys, because everybody I recommend it to, I make the trades myself, I take the positions myself, and I wouldn't recommend it if I wasn't making money. Scott, drop that link to the Discord in the chat. If you just scroll up a little bit, it's discord.krakencryptocurrency.com. Will take you right to our Discord. We put out 1 free trade, 1 to 2, depends on the week. 1 to 2 free trade signals a week, and if you're interested, you can hit up our premium info. And we do for $49.99 a month, which right now we have a 20% discount, so that's $10 off. So that's $39.99 a month. You can follow along with our trade ideas and see our signals. every single day, as well as get one-on-one mentorship with one of our analysts. So, yeah.
I would say looking at gold on the weekly, look at this large bearish divergence that just got printed. And we only just recently topped. I would say we're due for a few more weeks of a downtrend on gold. We're probably going to retest this support zone right over here, which we see we've already done before. Let's take a look at the 3-day and the day. 3-day over here.
You get that same divergence right there too, man. It's even stronger on the daily.
Yeah. Well, that's the 3-day. Let's look at the day. Oh man, look at the Fishers. The lines are pretty good. Yeah, I'd say this is a solid bearish divergence, and now we're starting to print bearish divergences on the day right here, where you see this is a higher high, but it starts making a lower high on the indicator right here. So yeah, whether you look at it on the daily, the 3-day, or the day, I think we're in for some downward movement on gold. So if you wanted to open up a short, or if you're in a long and you wanted to close it up, I think now's an ideal time to do that.
Yeah.
But I don't know. We could get a small bounce right here. I wouldn't bet on it though.
Nah, I mean we tore right through that low volume node, and now we're at that HVN. So yeah, if price goes through that HVN, I mean look at the bottom. Yeah, you're definitely looking for a retest of that support more than likely, or at least a stop loss hunt. I'd be bearish. You know what? I'd be bearish on that until we get some confirmation of breaking out of that channel, because that looks like on what is that? That's the daily chart. Pull up that weekly again. Yeah, that's a.
That was the daily. This is the weekly. The weekly is even worse. The weekly is like it's like the downtrend is just getting started on the weekly.
Yeah, that's nasty, dude. I mean, not to say it's nasty. It's position sizing. It's nasty if you're long. It's great if you're going short. But again, you can't be confident in a long until you break out of that channel. You're posting lower lows on price action and higher highs on your oscillator. Oh man.
Well, we have over the past 2 years, we have made a couple of higher lows in gold. But this is like since 2016. So in 2 years, we made this low, which was, particularly low. That was around the $1,050. And then we got this bounce around 1,020. And now we're up here around, we got a recent bounce around 1,200. But we couldn't make a higher high like we kind of had been doing. We made lower highs along here. Made a higher high here, and then I guess an equivalent high along here. And let's pull up gold on the monthly. See what it looks like on the monthly here. Oh, now on the monthly, that does not look too bad. We've got a very bullish divergence right along here. I guess overall. We're looking at some continued downtrend for the next few weeks, but over the next couple of months, I think we're going to see gold recover, because that looks like pretty oversold and a very strong bullish divergence. What do you think, Justin?
Yeah, I agree with your analysis, man. Short term, you're safe in your short position if you're trading gold futures. However, again, and I hesitate to do it because I like to look at sentiment data. I like to look at everything else, but just looking at raw TA on price action, with that Fisher transform tends to be pretty razor accurate, man. I definitely think that gold is in a strong uptrend, and this looks like a nice, just general cool off period before gold continues its rise up. And you got to remember, guys, gold as opposed to Bitcoin, when we do experience this financial collapse and individuals are looking to enter into something that they think is more stable, Leaches, you bring up a great point. Leaches says, I mean, there is a limited amount of gold in Bitcoin, so technically speaking, in the future, it will be worth Xfinity amount. Xfinity, not the best satellite radio station out there. However, I will say that you are right. However, I just want to put the counter argument out there that just because something has a limited amount does not necessarily mean that it will be valuable. Value is a social construct. So I just want, and again, I know that I'm kind of, throwing pearls before, no, that's not the right analogy.
Yeah, there's a limited amount of BitConnect. No one wants it.
Right, yeah, there's a limited amount of Ethereum, but that doesn't mean it's going to be worth anything. And I apologize.
Shots fired.
Shots fired at Ethereum. But I like that infinity. I like that descending Justins right there. But yeah, gold, we have to look at the fundamentals. Gold has been valued throughout history as a source of value. Whether you believe that's because the aliens came down and, slave created race the humans to mine for it, or whether you think it looks pretty as a necklace, or whether it's one of the greatest conductors of electricity on the planet, or whether because it looks fantastic on a gorgeous woman's neck, doesn't really matter. Gold has been valued throughout human history. And so when individuals are looking to exit their equities and their value stocks because they're crashing, they're going to be looking to get into gold. And then I think they're going to be looking to get into Bitcoin. And you're already seeing that as you see institutional money more and more come into Bitcoin and all the foundations. Scott said it really fantastically, man. Scott had talked about how, one of the things that we don't talk about is that, of course, I don't know why this 99 pixels thing is showing up. That's frustrating. Is that as we're seeing all these institutional, as we're seeing all these institutional services and money come into cryptocurrency, what we're really seeing is, all right, cool. Now what I'll do now is I will minimize. Let me go ahead and put you down here in the corner where you belong. Yeah. You're tiny now too. Don't worry, man. I'll put you down where you belong. You're going to see, oh shit, what the fuck was I saying? Scott was saying that as you're seeing all this financial money and these financial services be constructed around cryptocurrency, in fact, I want to, I don't know if you guys are aware of this, but, you're starting to see this in all these other countries, but Ukraine just announced official plans, a two-phase project for how they're going to actually legalize and legislate cryptocurrency as valid legal tender, just like Japan did. So now Ukraine is doing this. And in 2019, what they're going to do is they're going to start opening up avenues of financial backed services and things like Backed and things like Fidelity in places like Ukraine. And then in 2020, they're going to look for ways to tax and regulate. So this is just fantastic news. But what you're seeing is all these avenues pop up for large investors, large net worth individuals to come into cryptocurrency. And that's why I'm very bullish on things like Bitcoin for the future. You know what I mean? For long-term growth. And I will continue to trade speculative assets. And I'll continue to trade speculative assets like Ethereum, Bitcoin Cash, Shitcoin Cash, and Ripple to increase my.
What's Bitcoin Cash?
I'm a contrarian by nature. So I'm actually going to go out and say that I think that I would actually rather bet on Satoshi's vision. Think about it, right? Now, listen, for those of you who didn't hear it, I would recommend that you go listen to Tone Vase's interview with Craig Wright, Fake Toshi, the man who claims to be Satoshi Nakamoto. And listen, hey, what's going on, Wu-Tang? Thanks for joining the stream, man. Welcome back. So, Fake Toshi, Craig Wright, claims to have 51% of the mining power on Bitcoin Cash. CoinGeek, BMG, and SV Pool. Those three combined are 51% of the hash, and all those together are going to be over 51% of the hashing power. And if that's right, then Satoshi's vision will have a monopoly on Bitcoin Cash mining, and that's not a bad thing per se, but it just means that
whoever has Bitmain's backing is going to have the hash power.
Yeah, but see, okay, but that's the common view. Hey, sorry, I'm getting a lot of feedback from you, Alex, on your microphone because you've got the audio clearly on the YouTube.
Oh, okay.
So,
not sure what to do to fix that.
Just pause the YouTube and listen to me on the mic. So that's the commonly held view. You didn't pause it yet. Oh my God. It's okay. Hey, so that's the commonly held view that that whoever has that Bitmain has all the hashing power. But according to Craig Wright, and according to some of the reports that I've seen, that's actually not the case. That Craig Wright's side of the split does actually have the mining power, and just the public is wrong in thinking that Yihan Wu and Roger Ver do have all this hashing power behind them. And whoever has the hash has the power. This is not proof of social media; it's proof of hash. So since Satoshi's vision, looking at Poloniex futures, since Satoshi's vision, Bcash is down 40%, and Bitcoin Cash and BCH ABC is up 10%. I'm actually going to I'm not trading them, but if I were to trade them, I would probably place my bet on Bcash SV because the upside potential there is much greater. And I think that the upside potential for Bcash ABC is much lower. So, again, maybe I'm just looking to be contrarian on my bet, but, maybe half a percentile of my portfolio, I'd be willing to put in a Poloniex future bet. If somebody wants to match me on that, I would be willing to do that bet live. Again, not really based off, just based off what I've heard and what I've seen. I think that Craig Wright's probably most likely just a straight piece of shit garbage human being. Just like Roger Ver. But here's the thing. I know Roger Ver is a straight piece of shit bullshit human being. So I'd be willing to take the bet that Craig Wright might be less of a bullshit piece of shit human being and might be lying less, And again, it's a complicated concept. Do you think that Lightning Network is valid? Do you think that it's a good... I think that BTC, as written in the white paper, is the right thing. And actually, BTC right now is not that. Bitcoin Cash really is, all right? The block size was not in the original implementation of Bitcoin. The block size was kind of like a patch, a Band-Aid, all right? So originally there was supposed to be an unlimited block size. So the entire SegWit 2x debate, because BTC does have things that are aberrant that weren't in the original development in the original white paper for Bitcoin. You have SegWit, you have signatures, you have divergent signatures, you have Lightning Network now. And I'm actually for that because I trust the Bitcoin developers. But at the same time, I philosophically got into Bitcoin based on what was described in the white paper. And the reality of the situation is that SV Bcash is actually that. Bitcoin, the funny thing is that Bcash ABC wants to implement Ethereum on Bitcoin. And this is coming from Roger Ver, who originally said that the reason that they wanted to split is because they didn't want to implement SegWit. So it's just fucking crazy, dude. Like, Jesus Christ. So this is the reality of the situation. Bitcoin, as we know it right now, BTC, is Bitcoin with SegWit and Lightning Network, which were not originally ideas, but again, technology grows and you have the smartest developers working on Bitcoin, and this is how they think the future is going to become. Because I don't agree with people that say Bitcoin is going to be money, but not currency. I think that's bullshit. USD is money and currency. I think there is a technological way to make Bitcoin money and currency. I don't see the need to have a money and then a currency based off money. However, I am open to the idea that that is a potential future. I believe that, okay, so let me see here. Okay, so Bitcoin is that, all right? Bitcoin Cash, ABC, is Bitcoin without SegWit, without Lightning, but now they want to implement Ethereum on the Bitcoin protocol so that you can have smart contracts. Okay, whatever. Now that's something completely different. And then you have Bcash Satoshi's vision, which just wants to be Bitcoin. Fast transactions, cheap, almost free, instantaneous, unlimited block size, blah, blah, blah. So, which one of those do you support? You got to kind of dig down deep and see where you're at philosophically. And it's a complicated thing, man. I mean, right now I'm BTC for life, guys, but I see the point, I see the purpose of Bcash SV, and I'm not going to be one of these retarded assholes who's just running around saying, oh, Bitcoin Cash is complete bullshit. Roger Ver's bullshit. The idea, I think, of implementing Ethereum, which is a complete failure as far as I'm concerned, on the blockchain protocol, the Bitcoin protocol, is retarded. That's why I think Bcash ABC is retarded. But I get the concept of SV Bcash. So maybe I'm completely crazy, right? But I haven't put any money behind it. But I'm just saying that I would like to see where the market turns out. I think there's plenty of time to move. Do I think that SV is going to win in any significant way over BTC? No, they don't have the developer power behind them, and I don't think they have the hash power as opposed to BTC. I think it's going to be a small footnote of philosophical struggle when we look back in history. But you have to be philosophically consistent and honest about this kind of stuff, guys. Otherwise you're just being a fucking NPC, man. You're just being an uneducated person. You know, you have to understand what you're talking about, and if you're going to argue a philosophical position for some of this stuff, you know, understand why you're arguing what you're arguing for. Scott says ETH is clearly not a complete failure yet. All right, guys. Let's see here, guys. You know, we've continued to grow in viewers, guys. We appreciate it, man. 4 watching on Twitch, 13 watching on YouTube. I really appreciate it. I know that I talk a lot with my hands, and I'm just that silly, crazy, successful crypto trader guy. With my good buddy Alex. One of our most promising analysts. Hell yeah, man. If there's anything, anybody, okay, so again, I'll open the floor for the next few minutes. If there's anything you guys would like us to look at and chart, I'm open to doing that. So I'll wait for the delay to catch up so you guys can get that, and then if you guys want us to take a look at anything, we will. Other than that, Alex, anything you want to ramble about?
Anything I want to ramble about? XLM looks like it's taking off like a rocket right now.
Yeah, we talked about that. I talked about that in this morning stream. Yeah, it's still going? Nice. All right, well, let's take a look at that bad boy. Invest your stock, boy. XLM is hot, boy. Yeah, man.
Yeah, parabolic.
XLM looks pretty goddamn good, guys. All right, let's throw on the traditional indicators, guys. We'll see what we got here. Yeah, I know it's a little hectic, guys, but this is what it looks like when I initially start up, and then we start to make sense of everything. So let's just look at volume here, guys. I mean, we've got quite a bit of ways to run, guys. I mean, seriously, we've got the 786 above us at 45.48. We've got the 86.6 or 88.6 at 47.52, and we come back to our current resistance level at 49.57, guys. So overall, that's giving us quite a bit of room to run. You know, we've got a total upside potential of another 13% to run. We're breaking over our recent resistance level right here at 45.11. Or let's see what happens at 45.11, but that's going to be our 786. Let's see what happens at that 786. If price rejects at that 786, that generally means price is going to continue to move down. But let's look at VPVR, guys. Let's minimize Smart Fibbo for a while, guys, and let's just look at VPVR. So yeah, this looks amazingly bullish for me. Generally, price is going to rip right through this low volume node, guys. You know, just looking at this market that I've got, or excuse me, just looking at the current volume data right here, this is all LVN territory, guys. So I don't see anything really stopping price from ripping right through. We're going to experience resistance right here at the top of the volume area. We're coming up to it, and that is reversed price 1, 2, 3, 4 times, guys. So I would be careful, guys. Again, I talked about this morning, guys. I talked about taking profit on XLM, guys. So once we break above this value area, the 70% value area, and we really, actually for me, it's going to be if we get above 48.07, because and I don't know if you see that, Alex, too, but if you look at the whole of price data, like on the daily chart, that's where the absolute high volume nodes end, and above that it's pure low volume nodes. It's pure low volume nodes, and we're just gonna
we can start looking for a new all-time high.
Yeah, absolutely. Yeah, absolutely. So again, at this current moment, guys, I'm still looking at taking profit on XLM. I talked about taking profit this morning, and I mean, just look at this, guys. We're coming up to an area where prices have been reversed 1, 2, 3 times previously in the past, guys. Once we get above this, yes, we can start talking about new all-time highs. You could take the trade from 45.06 to 48.07. That's probably going to make some good profit right here. Okay, that's, well, it's only a 6% trade, but that's okay. If you take the 6% trade, that's fine. Do I think that XLM being listed on Coinbase is going to make price run? No, I think that when XLM gets listed on Coinbase, the price is going to tank like everything else that's been listed on Coinbase.
There's enough places where people can buy it. Like, there's no reason that, like, oh, it's suddenly a new market for XLM. It's a very mature altcoin.
Right. Yeah, anybody who wants XLM already has XLM. Having it on Coinbase doesn't make it any better. Let's see here. Let me take some requests from the chat here. Philip says he Philip says he charts Chainlink a lot. Yeah, you know, Chainlink's been something that I've been kind of following and watching. I've seen potential setups, but I haven't acted on them. That's fine. It's whatever. And Patrick Carr wants us to take a look at Salt. So yeah, okay, so just to finish up on XLM here, guys, I'm still looking at booking profits. I think the safest thing is to book profits, because if you've been in for a while, like on XLM from the initial like talk about the rumor, I mean, you're up like 30%, guys, 20 to 30%. So don't be greedy, book your profits. Leeches says, Linky, stay stinky, man. That's funny as hell, dude. I like it, man. Leeches, I like you. You can stay, man. All right, so let's see here. Yeah, I'm still looking at booking profits on XLM, because if we do bust above that value area, we're going to retrace to test the value area as support, and then we can look to enter there with a stop loss underneath support, or resistance turn support underneath support now, and then you've got that upside potential of breaking through that low volume node, and I mean, that is crazy upside potential. All right, another 30%. So take your 30%, take your 10%, take your 5%, and be patient and wait, man. All right, so let's look at Salt BTC. I've heard a lot of stuff about Salt, guys. So okay, chart. This looks like every other goddamn fucking altcoin, right? Where we have the listing on Binance and everybody's selling off the ICO, and you can tell the difference between something that was ICO'd and something that was fair listed or fair mined, because Salt gets listed on Binance. Salt was an ICO. Price immediately dips, enters into this scallop formation, and breaks immediately down. So this is a failed cup and handle pattern. We do see this a lot. And what you're going to see with a failed cup and handle pattern, guys, is you're going to see price form your cup, form your handle, and then price is unable to break above your top of your cup resistance. All right, so that's what a failed cup and handle looks like. Otherwise, when you get a successful cup and handle, typically what you do is you measure from the top of your handle, okay, and then you measure down to the low of your cup, and then you take that and you project that upwards to the point of the breakout, guys. So if Salt had broken out here, then we were looking at all-time highs of 2131, or to put that in numbers for you guys, upside of like 40%, 42%, okay? That did not happen. And because of that, how much downside did you see? You saw 70% downside, all right? So a little bit of the same thing magnified.
That was one of my long-term holds. This one hurt.
Yeah, Salt hurt. And I remember all that, like, Salt's going to be fantastic. Salt's amazing. Loans on the blockchain, blah, blah, blah. And don't get me wrong, there's been like some long-term speculative holds that I've picked up that didn't work out for me. There's been some that have worked out. Salt was not one of mine, but yeah, I feel you, man. Like, I feel you. Like with Ethereum Classic, man, I was way more bullish on Ethereum Classic, because I thought that, that was back when Bitmain was really popping, and I thought that kind of everything that Bitmain did was going to be important. But yeah, let's go in and look at Salt, guys. The first thing I want to do is, all right, so let me delete these lines.
I've got Salt started a little bit.
Yeah, let's do that. Let me just look at volume and see what I see right now in the near future, and maybe look at some Fibbo, and then I'm going to kick it over to you because you might have a better analysis than I do, because this is just off the cuff for me. All right, so let's look at the top and the bottom. So you can see that we got rejected from the value area right here, guys. So we had a false breakout of the value area. When we have a false breakout out of the volume area, price tends to retrace. And again, we tested resistance and we got rejected again. So generally when that happens, I'm looking for price to come down to the 618 or the 786 to hold. So yeah, right now I'd be looking for price to come down to the 618 or the 786.
Well, I show price at the 618 currently.
Are you measuring from the bottom to the top?
Here, why don't I show you my screen? 1 second.
Yeah, please, let's just do that. So let's go to window capture, and then I'll transform and stretch you to screen. There you go.
All right.
Hey, you go ahead and do that real quick. I'm going to step away from the computer for just like 30 seconds, and I'll be right back. You go ahead and do your TA.
So I have this from the start of the movement to the end of the movement here. So this is what I'm showing. Is if we consider this the start of the breakout, a breakout up to here, then a brief retrace before finally topping up here, and we've broken down, hung around the point of control for a little while before breaking down to the point 618, and we are showing some signs of a bottom forming here. Now, this is not a bullish divergence at all. This is just some bottoming patterns forming on the Fisher. But let's take a look at it at the daily. And what we show is we could be forming a bottom here, but it is too soon to say. We don't have a cross, and we don't even have a unconfirmed cross. It's just, you know, a little bit of bottoming pattern forming. But I don't think it is time to get into salt. I would attempt to try and pick it up towards the bottom of this trading range, which I think we're going to head back towards. You know, we might see a little bit of a bounce here, but I think it'll be a short-lived bounce. We might bounce between the .618 and the .5, and then head back down a little lower. We might even see a complete retrace here. So definitely, you know, it looks like we might have reached the bottom of salt for now, but try and pick it up around the you know, 8,600 sats, or maybe even around 7,200 sats. So that's my thoughts on the matter. Justin is still gone from his chair, so I suppose I am still hosting this live stream for right now. I will tell you what, since we've taken a look at salt, we see it's not entry time right now. Let's bounce on over to Link, which I have over here. So yeah, as had been pointed out, Link is kind of due for a retrace, and of note is that we are probably going to make a much lower high on this indicator than we are right here. You wouldn't call this a bearish divergence because it's lining up appropriately, but you know, you can see there's weakness in price. I would not want to enter here, definitely. Or at least if we were to enter, we'd want to enter some kind of bounce around here. Yeah, just probably more along the lines of here than anywhere up here or down here. This is a mature uptrend. I would not want to enter here. Justin?
Hey, thanks so much, Scott, for trying to start a tip chair for my the tip jar to get me a new chair. I'll have you know, my chair is extremely comfortable, and it's been with me through thick and thin, man. So obviously, yeah, like I refreshed my glass, so I'm not sure. I missed your TA. Is there anything that you'd like validation?
I went over all of salt, and then I touched chain link. But for salt, the upshot is that they need to wait until it's back down towards the bottom of its trading range.
Yeah, I am inclined to agree with you. Looking at chart on the daily and the 12-hour, again, it looks like we've kind of peaked at the top of our range. Now, the only thing that'll change my mind is, again, we're below that point of control on the 12-hour, and we're still in that super high volume node with a low volume node above us, guys. So again, we can see that twice now that we've had a stop loss hunt to the upside for movement downwards. So we've had a stop loss hunt up above that low volume node. So when we've had 2 of those, it seems more likely the price moves downwards and stay within that trading range. But here, let me minimize you. All right, cool. So since we've had 2 of those already, as you can see here, we've had 2 stop loss hunts to the upside into the LVNs. Generally, when I see that happening, it's showing me that there's just not enough momentum at this time to thrust price above that high volume node trading area. So yeah, we're definitely in this trading range. And to my metrics, that looks like 731 to pretty much a 1201. All right, so that's a significant trading range, guys. You know, I really wish you could short more of these goddamn altcoins. That's really the thing that I'm looking for to come into the space.
Yeah, altcoin shorting would be amazing.
Yeah. So that's a 37%. Yeah, it's a 37% range, guys. So that's a pretty decent range to trade within. But yeah, I'd definitely still be short on Salt, just looking at it right now on the higher time frames. And again, I like to start my analysis off the higher time frames. And again, we can only do raw TA on price data because there's no sentiment data. What we can do is order book analysis, which is something that I will do and do like to do. So if you're just looking at trading view, again, okay, so now you guys can't see because Alex is in the way, but I'll move Alex over here. And so, yeah, this is the most basic order book analysis you can do, is just looking at the depth chart. And you can see that huge, massive sell wall compared to the buys. And then you can kind of zoom in on that and see the convergence or divergence. I completely don't look at this crap generally whatsoever. But yeah, what I like to do is I get onto Binance and I would look to actually look at the order flow analysis. But I only do that with day trading. It's not valid for longer term trading because you can have order book spoofing. It's quite common. All right, so I'm looking at now. I've got it pulled up. Listen here. Let me.
Oh, that's ugly.
I'm gonna pull up. Here we go. Let's go to you. That's not right. Let's go to YouTube. Sorry, I run YouTube off my laptop, so looking on my desktop, I'm gonna have to. Here we go.
What are we doing?
I'm looking at Phillips chain link chart.
Okay.
So, Alex, tell me when you see this, and then tell me what you think.
Well, I mean, I see things at the same rate the viewers do, so...
Right, that's why I'm saying, like, when you see this, tell me what you think.
Okay. I think Chainlink is losing momentum, and that it is going to drop very soon.
So you think we're going to break out of this channel?
I think we're going to break down from the channel.
Right, that's what I meant to say. Pardon me. So yeah, another thing too is, so here's what I want to point out is just what I'm seeing on this. You can see that we were able to break out of this trading channel, and we had 2 false breakouts of the 786 level because the 786 level was not able to hold as support. And so typically with Fibonacci strategy, when you see that something is unable to go above the 786 or go below the 786, then price is going to continue moving in the opposite direction. So clearly you have 786 here as a resistance Fibonacci. If price isn't able to go above the resistance Fibonacci, generally that is the market's way of telling you that price isn't able to rally enough momentum for it to break to the downside, and that you are range bound in the metrics of where you're trading in. So I would recommend looking at this on a higher time frame, like the 12-hour or the daily chart, and figuring out what your trading range is. But yeah, I'm biased to agree with Alex on this. This does look like more of a breakdown. I mean, you could have a potential bounce up to that 50% line, but you've been rejected from that upper, or excuse me, that's not the 50% line. Well, it is the 50% line of this upward channel, and it's the it's the top point of this fib channel that I've seen you've drawn out. So this is a double tap off resistance and a double tap unholding 2 failed breakouts of the 786. So this actually looks more bearish to me than it looks bullish. And again, you can be proven wrong with your technical analysis if price is able to rally, but just looking off my knowledge of statistical occurrences in the past, this does look more bullish than bearish, or more bearish than bullish to me, based off the double failed breakout off 786 and the double tap off the top of that lower fib channel and the 50% channel, or the 50% heart line of your up ascending channel. That double tap down is pretty bearish to me, honestly, guys. Okay, cool.
You want to call it?
Yeah, it's been a good one, man. So guys, Alex, I'll let you go ahead. Is there anything you want to plug before I pay the bills?
No. Thanks for stopping by, everyone. If you have any questions, feel free to direct them to us in the Discord, and we'll take care of you.
Awesome, man. Cool. All right, now, guys, if you've heard it 3 times before, that's only because our Chief of Operations Officer requires me to put advertisements in. So, all right, guys, so what you need to do is direct your browser over to crackingcryptocurrency.com. You direct your browser over to crackingcryptocurrency.com. You get this beautiful website designed by Revival Tech Repair Design. Oh yeah, Revival Tech Design. Beautiful. All right, guys, you want to click this blue button, join the community. It's going to take you to our Discord, and that is where you want to be, guys. While you're here, stop by the merch store. Support the show, guys. That's what keeps us on air, keeps the lights on, keeps the webcam streaming, keeps the microphone going, guys. Make sure you pick up a nice t-shirt, a lovely lady shirt for the lovely lady in your life, a ball cap. We all like to look swagged out. Hey, maybe you're working out. Get that muscle shirt. Show the ladies or the men the muscles you've been working on. If you're interested in taking your trading to the next level, make sure you check out our trading services, guys. Our premium subscription to our trading group, where you're going to get one-on-one mentorship from a professional analyst like myself or Alex, is going to set you back a very nice little sum here, guys, that I think is great for the market. Also, you're going to get our trade ideas, our trade setups, our trade ideas. And make sure if you have any questions to contact us at contact@crackingcryptocurrency.com, or just fill out this form, guys. It goes right to us, guys. All right, that's all I got. Make sure you do that. Some shout outs real quick. Make sure you guys check out Your Crypto Daily News on the YouTube. Should be in the, no, it's that way. Should be in the card. Sometimes that gets posted up in the top, like little right. I can't do this because of my webcam. Wait, that direction? That direction. Yes. Wait, guys. You guys see in the supermarket? Which way to the supermarket? This way or that? Make sure you guys check out Your Crypto Daily News. Proud supporters of the show. Go pick yourself up some MMO coin. And yeah, that's all I got, guys. All right, you guys have been fascinating, wonderful, love the show. Thanks to everybody that has joined us, all the viewers on YouTube, all the viewers on Twitch. Love you guys so much, man. We do it for the love. All right, guys, have a good night, and you know what time it is. Cue that outro.